to at some point, but I think we're good to get started. Hi everyone, welcome to our workshop. This is the fourth episode of our six series workshop. My name is Darren Franks. I'm the CEO of a business called Talent in the Cloud, and today we're talking about the game plan, and this is all about readying the business for the upturn. So we're trying to give this a very much a positive feel. We are going to go through some of the challenges we're all facing and a bit of a market review. This is the agenda for this morning. Quickly talk through the 6-week series. If people have missed any of these, they're all fully available and freely available on our website and on YouTube. We'll go through the introductions of who we've got here today, a quick market update and sector update, and then we'll get into the real crux of this workshop, which is about devising a game plan. So the 6-week series, as I mentioned, we're towards the latter part of this. We started off with peach payments on how to increase your transaction volumes, and some really interesting insights from Andreas Demleitner, and Simon again was on that webinar. Actually, Simon, you've been on all of them, so we'll come on to the introductions in a minute. We followed that by looking at using this as an opportunity to develop, refine, and potentially pivot your product, your fintech or your payment product. And we were joined by Piotr of Opera Software, specifically in their fintech business over in Poland. He gave some interesting sort of views and examples, and using Paytm, I think, as a case study on how they've really shone through over the last sort of 10, 15 years. Last week, we were joined by Nick Small from Apis Partners. Apis Partners are a large private equity firm based in London. They have a number of fintech and payment companies within their portfolio. And Nick gave, I think, Simon, maybe you'd agree with me on this one. I think Nick's overview and some of the practical tools that he gave to the audience was
extremely helpful.
Yeah, it was a full matrix in terms of how you can go about, cost optimization, what sort of funding options you can look at. So, if anyone on this call is a business owner, a CEO, or what have you, CFO, I really would encourage you to have a watch of that. It really was very insightful. And then today, I'm going to come on to the introductions in a minute. I'll move on to the next one, actually. So next week we have Melanie. I know Melanie's on this call today, and we're talking about talent retention during this time. And we'll talk about a bit about talent throughout this topic today, but really next week is a pure focus on that. And lastly, to wrap off the series, it's actually my coach, George Anderson, who I think Meirav also met at EWPN, the European Women in Payments event last year. And George is phenomenal. So he's been helping with my sort of mindset and my resilience over the last year. And he's coming on, and he's offered to do a free sort of hours session for everyone. So a slightly different view. And obviously everyone's welcome. So let's move on to today. So as I mentioned, my name's Darren Franks. For those of you who don't know me, I run a business called Talent in the Cloud. We specialize in providing executive talent to the fintech sector, and more specifically in emerging markets. Next, we have Simon. Simon, I'm going to let you do your intro. I'm going to let everyone do their own intros because it comes better from you than from me. So Simon, would you like to go next?
Absolutely.
I probably should have done ladies first, but I apologize. Meirav, I apologize.
Well, it's a democratic according to the so Flexible is an early stage company. We built a global index of fintech cities and fintech hubs worldwide, and we're using that to subsequently build out a fully functioning database of fintech innovation companies. The idea being that you'll be able to see where innovation is coming from, map and track innovations across financial services. We go live with that towards the middle of May with our data partner Crunchbase. So we'll send you details of that when it comes off. Thanks, Darren.
Fantastic. Thank you. Meirav, over to you.
So hi everybody. I'm Meirav Harel. I'm the CEO of IQONIQ. I'm a veteran in fintech over, it's embarrassing to say, 18 years of finance and technology. I was managing the business development and product of one of the biggest security trading websites in Israel. And later became the COO of Bancor, a blockchain-based company that raised $150 million in a crowd sale. My background is actually I was a programmer in the dot-com era, and then I pivoted into about crisis, financial crises and what happens, and then you have to pivot. So I pivoted into becoming an investment consultant. I'm the Israeli ambassador to EWPN, the European Women in Payments Network, that everybody is obviously invited to join. It's very important. And I've been chosen twice as one of the leading women in fintech in the world. And I work with governments and regulators, big banks and enterprises around the world, in Israel, Europe, Taiwan. And now I'm the COO of IQONIQ, which is a fan engagement platform for sports and entertainment. And we'll get into it a little bit later because that's kind of relevant to what's happening with COVID, and it's suddenly becoming more and more relevant to move many sectors into digital. So I'm happy to be here.
Great. Thank you very much. Thank you for joining. Brett, over to you.
So I'm the co-founder and CEO of Hepstar. We're a global API-based B2B technology company that focuses on online travel, which is a really interesting space to be in right now. So what we do is we optimize the product served in Path, and we also provide content aggregation. So it's a single integration for our partners, and they get the benefits of optimization and then also the content. I've also got exposure to blockchain. So I'm a co-founder investor in a company called Arctree, which facilitates blockchain in the more informal retail environments. So your wholesalers bringing it to market. And yeah, thanks, Darren. It's nice to be in the session with everyone.
Thank you for joining. Great. So I think we're going to go through a quick state of play of the global payments industry. Again, over the last 4 weeks, we've spoken in some length about this. And when Meirav and I were talking last week, there was kind of an interesting take on this, which was, the possible scenarios. And we're not here about scaremongering. This is not what this is about at all. But I think this is a slide worth talking to. Meirav, would you like to take over at this point and talk us through your view on this, because this is your brainchild, not mine.
Okay, so well, when trying to speak about like the business opportunities and where fintech will mature according to what's happening with COVID, I think it's important for us to look at the different scenarios of where COVID could take us, because there could be, like, on the easiest scale, we could be talking about, where we're under lockdown in a month or two, everything's going to go back to normal, the virus is going to disappear, they're going to find some sort of, I don't know what, an immunity system or something like that, and, things are going to go back to normal, and then we only have the recession to deal with, but business is going to go back to what it was before COVID. A little bit, I'd say, worst scenario would be that we're going to go in and out of lockdowns for quite a while, because they're not finding the immune, or they can't find the treatment, and then the lockdowns will continue, let's say, for a half a year or a year, which has implications on businesses and on economy, on macroeconomics and all the rest of it. I'd say the third level is that the virus is not that easy to deal with, because I don't know what, it mutates, or people can, get can get it again and again and again, and that means that humanity, as we know it, needs to go into, I'd say, a long-term kind of different way of living. But in this scenario, we still have the supply chain, and we still have governments, and we still have control over people around the world. And which brings us to the fourth scenario, which is the worst. I don't know what, it's like we can talk about what are the chances of each of these scenarios, but this is like the spectrum. The worst case scenario is that this leads to some sort of, anarchy, or it could come from the direction of not having supply chains, and then you go into riots, and people are hoarding guns in different areas of the world, and or it can go into a different direction where you could get to this scenario because the anger at what happened with China, or between different countries, could blast into some sort of war. And we know that after recessions, historically, a lot of wars happened. So we don't, like, this is like, I'd say this is the scale of where things could go And when we're asking ourselves how to get our business ready or where fintech is going, it should kind of be in a perspective of where do we think the world is going to continue, because it's going to be a different discussion if we think that there's a really high chance of anarchy, as opposed to if we think that, you know, normality is going to come in 2 months, and anywhere in the middle, because that means that we might be in a different kind of business. First of all, we might need different kinds of fintech solutions or digital solutions. The products that people are going to be needing or the needs that people have are going to change in each of these scenarios. So, you know, I can say that I'm hoping that we're talking about scenarios 1 and 2, but we can't complete, I'd say, that the picture or you know, look at it in a wide range without taking into consideration that there could be scenario 3 or 4. And I think that each business or each government needs to say, you know, think, where do we think this is going to go? And according to that, create the plans of where we want to build ourselves in order for, you know, to be ready for the future that we're predicting that's going to happen. So that's kind of like an explanation of, I'd say, the macro side of it.
No, sure. I'm going to bring Brett in on this as well. Brett, we had a discussion yesterday about you know, potentially some positive news coming from parts of the Middle East in terms of the airlines starting potentially to resume flights. Now, obviously, that they've got plans to. Whether that actually happens or not, as you quite rightly said, who knows? But you know, if you're looking at this now, you know, maybe you're an optimist, like, a little bit like I am, and trying to look, you know, half glass full. Where do you think we are? What are you planning for in your business?
I think, you know, it's at the end of the day, you have to plan for the worst and hope for the best. You know, as Meirav is kind of giving that sort of indication, but you also have to work on a day-to-day basis. So we've taken a fairly positive perspective in terms of, you know, hoping the recovery happens sooner. But in saying that as well, we're planning for worst-case scenario. My gut feeling, if I'm very honest, is I can't see industries like the US and Europe and Asia surviving more than 6 months in this type of climate or environment. So I think that they'll be pushed to get industry sort of moving forward, particularly in those regions. I think more emerging markets like South Africa, Brazil, India, I think it's going to be typically a lot more difficult for them to essentially ignite the economy and to normalize things. With obviously all these other factors which are complete unknowns. It's really like looking into a crystal ball to a large degree. So from our perspective, you know, we focusing on our foreign partners. So we work with a range of global tech providers like Aero, CRS, or Smart Air, or Travix, Gulf Air, their range. So we're very fortunate in the sense that when the recovery starts happening, and I believe it's going to be based on different regions, whether it's domestic or international, we will start getting that exposure, which really helps us. So we're planning towards that. In a sense, if it goes towards, I would say, the 3rd or 4th level, goodness, who really knows what to do as a business owner? So I try not to think of that. I think there's also so much content available right now on COVID-19 that sometimes I don't look at the news, to be honest, because I think a lot of it that's coming out is fairly negative. And I personally believe in good energy and putting in 150% and doing what you can. And that's what we're doing now. We've got a roadmap to make sure that when we come out of this, we're going to blitz in terms of, you know, the products that we offer and our rollouts, and ensuring that our partners can also get through this and they can make revenues from the ancillaries.
Great, thank you. Simon, sort of last point on this slide, and then we're going to move on to the more positive side, I promise. Any views? Obviously, you're speaking to people across the planet when it comes to different sort of regions and fintech. So what's your view on this?
Well, I think Meirav's point on the spectrum is quite helpful because you know, you are seeing different takes on different regions. Obviously, partly that's because the pandemic has moved around the world at different speeds, but also because some regions, the top a bit more stability and a bit more coherence to the business community. fintech, particularly in Western Europe, has responded quite well, I would say. I mean, yes, the actual business impact is going to be challenging, but kind of the success of fintech having been enabled, partly through regulation in the last decade, has meant that these companies have formed and they are more able to respond to a sort of a challenging market. Likewise, you might say sort of similar things in in South America. There's sort of innovations are popping out of South America, but again, because there's been a sort of a formation of innovative fintech companies, and I expect from what we hear in Africa, the same will be true in Africa, albeit that for these regions, the funding picture is going to be quite challenging. I would say for me the big concern is that we were talking before the calls, before we came live, about the kind of how small the world has become, but the big challenge is that these solutions that we need now are global. We need global solutions. Possibly regional would cut it, but ultimately we need some sort of global pull together, and I think we're not really seeing that. So I think whatever happens, how fast and how deep the digital push will be because of COVID, I think what we will see is more regionalisation in general across business.
Great, thank you. And Meirav, just to cover off one point on that, sorry, which was some of the industries that may come and go. We won't. My last point on this, but I think on the last two, certainly the last the anarchy option or scenario is if you can pivot into arms dealing, then or facilitating payments for arms.
Yeah,
then,
creating like an eBay
really well.
for arms or something like that would fit for scenario number 4. Assuming
Absolutely.
that we have electricity and everything. But yeah.
On blockchain, of course.
Well,
yeah, on blockchain, because then
I'm sure there'll be
then you can know who the assassins are good, for your protection and stuff. But that's kind of like a way out there scenario. So.
Yeah, the KYC and the AML on that side would be interesting, won't it? But, we can come back to that. So, again, looking at the positive side, I mean, me personally and my business, we're looking at this really as a countdown. So this is the countdown to when things get back to some degree of normality. I'm not saying it's there's going to be a switch that's flicked and we all go back to how it was beginning of February, but or end of January. But I do think that potentially some of the scaremongering has kind of been, certainly in Europe. We look at Europe and there is more positivity. I was talking to friends of mine in the UK this morning, and they're starting to feel a little bit better about things. Things have, the curve has started to be flattened, and death rates are starting to come down, thankfully. So I do think there are some positives. But looking at this, and again, I'm really sorry, Brett, but there has been triple-digit growth in non-travel items. I know you don't want to hear that, but it's a kind of harsh reality of what it is. Simon and I were discussing, I think it was last week, about some of the products now that are are in high demand. Bread makers, weightlifting machinery or equipment. All these things are flying off.
Automation in supply chain in factories and suppliers.
And I think it's obviously different country to country. Here in South Africa, we can't get any goods or really any services delivered. That may change by Friday. But the last 4 weeks has been really, really difficult. We're really restricted in terms of what we can buy. What can get
really?
delivered.
Wow.
So, yeah, absolutely. So it's essential items only. It's been a challenge. But anyway, we can come back to that. I think a positive thing for fintech as an industry is that there has been this massive shift away from cash for obvious reasons, right? Contamination and just ease. People need to buy online. So I think that's potentially accelerated the growth or the adoption of fintech and digital payments. So I think that's a good thing for us. And then increasing contactless payments. There's a couple of very interesting point of sale providers across the African continent who have actually had to pivot. Some of their transactions went down 90% on the day of lockdown. They've pivoted and they now offer online, take payments online. So I think there's been some interesting sort of angles to that, but I'm not going to focus on any of the negatives because it's time to move on, if my screen will allow me to. This is technology, right? Great. There we go, the game plan. There we go. We were saying, weren't we? Imagine doing this sort of 15, 20 years ago. It would,
oh, no, that would have been really sad. Yeah.
It would have been, yeah. You'd have to remember people's phone numbers as well, wouldn't you? Yeah.
Yeah.
So we're going to talk about the game plan now. This is the main part of the session today. So really eight points, and I'm sure there are plenty of others, but I think we decided that there were 8 we wanted to focus on. Which is, first one is your business plan. You know what you should be doing, how you should be thinking about your business now. Setting realistic expectations, not only to your staff but to stakeholders as well, and that's board, that's partners, that's everyone else. I think the third point, which for me probably resonates more than anything, is understanding your customers. How have your customers changed? And we're going to ask Brett to talk on that one at some length, because that's a core part of his business. Then we're talking about building and cementing supplier and partner relationships. You know, we are, again, apologies of using a phrase that's been used all the time, but you know, we are all in this together, and if we can help each other out, especially in the fintech ecosystem, and again, I think this was a theme that's run through all of the workshops that we've run, Simon, was about, you know, collaboration. There's a time for competition. This is now a time for collaboration. So how do we do that? Then we're talking about being sort of front of mind for when the market recovers. So what can you do in terms of thought leadership? How can you position yourself and your business for when the market does return, and you know, you're in prime position? Talking about some of the activities your team can do as well, and automation and business improvement. And then lastly, just a quick few minutes on how to build a talent pool and why it's really, really important to do that now and not wait. So if my slides are working, we're going to move on to the first one, which is talking about your business plan. My slides are not working, but there we go. So on the left-hand side of this page, we can see a crisis management toolkit. I alluded to a session we ran last week with Nick Small from Apis Partners. Apis Partners have put together a full matrix that they use for all of their portfolio businesses to help them try and navigate and make some sense and make some sensible decisions based on what's happening at the moment. Again, more than happy to share this. It's on our website and it's on YouTube. And if anyone would like that, then please let me know. But you know, I think some of the core things, Simon, I know you were writing up sort of some of the notes from that session, from what Nick was talking about. Yeah. You just want to run through sort of those key points there that Nick mentioned, you know, in terms of revising that business plan. And, you know, I know for us, we have a growth plan that's had to go in the drawer for the time being. And, you know, we've had to tweak that somewhat just to get through the next 6, 12, 18 months. Simon, anything from your side?
Yeah, of course. I mean, I think what's really helpful to think about, really, you know, is particularly from an African context, is that this is now, you know, we're now into a kind of new 2-year cycle. You know, I think we're likely to see a sort of signs of a real recovery starting at the, you know, basically what that means is starting at the end of next year. So I think, you know, from the purpose of last week, I mean, you know, Nick was sort of underlining that, you know, really you've got to be then thinking about, you know, what does your cash position look like based on that new time frame? You know, everybody, you know, it's a great cliche, but it's you know, it's never been true as the last couple of weeks. You know, cash is king. So you've just really got to work out, you know, what you're spending on, you know, what's important and cut what's not. You know, there's also this whole issue of around runway, you know, and that really does apply to fintech in particular, particularly those fintech companies that are consumer focused, such as the challenger banks. You know, we've seen Monzo in Britain, you know, a hugely successful fintech firm, as a challenger bank. You know, even with a fintech company that's been as successful as that, you know, they're not really profit making to any great degree, and they've slashed the costs. They've slashed their, you know, cut salary costs rather, and even I think the CEO has bowed out of taking a salary for a year, or halved his salary, or something to that effect. So it's really about taking, you know, to your point, Darren, you know, it's taking difficult decisions, you know, reducing expenditure. And it's also about using that as a sort of psychological tool, really, for your staff and your stakeholders to say, we're taking action, and this is how we're going to get through this difficult difficult period. And then, you know, it's really about this core business issue, which is, you know, take a view on where the business is going to come from over the next month to 2 years. And again, if it's not pivot, then do you need to refine and focus? So going back to the things that you know, that you started out doing when you first set out, or the stuff that brings in you know, more money and more predictable income in the shorter term. So I think, you know, that's the I've got to your point, Darren. I owe you that piece, which is coming. But basically, we're going to do three key actions and 3 key attributes for managing the sort of crisis and the period after. And we'll publish that shortly. So we'll get that out this week, hopefully.
Great, thank you. Brett, we spoke again last week about, you know, cash is king, and I think that's the same for every business now. But there were some other things that I think we discussed as well about not necessarily pivoting a business, but you know, looking at the core product, making sure that it's optimized now. But when it comes to planning, so if we're looking at our 1 to 3 year plan now, are we able to do a 3 year plan? I mean, you know, I'm struggling to make a quarter, you know, make decisions based on a quarter, let alone sort of 2 or 3 years time. Is it unrealistic? Do we have to go to your point right at the beginning, which is take each day as it comes? But I do think there needs to be some sort of plan in place.
Mm-hmm. I think, look, we take every day. For us, you know, as we've mentioned, cash is king. If anyone takes anything from this, cash is king. I mean, we're not changing our business model, our business plan. We're focusing a lot more on our forward-looking cash flow analysis, which we review on a week-to-week basis, because ultimately managing of cash flow now is essential. So we're looking at it more over a 6 to 12 month horizon, because so much can change. Tomorrow, a lot can change, you know, in a month. So for us to refine that and look at it from an unknown perspective just doesn't make sense. So we're focusing on ultimately the things that are going to make a difference right now, which is ensuring that we've got, you know, our guarantees released, that we've got access to funding. When it's come to staff and, you know, something that Simon mentioned, we've actually taken a little bit of a different approach there. We put forward to the staff, you know, we've got 2 options. You know, number 1, we go the route of redundancy and retrenchments, or 2, we do cost cutting and everyone takes a hit on a sliding scale, you know, making sure that the guys that are not earning as much as everyone else have at least got, you know, a threshold where they can buy food and they can live and they can get through everything. And we actually put that vote to everyone in our team. And we made the team sort of vote on it and decide on how we're going to manage it. And I think, you know, there was a lot of positivity out of it. I think empowering everyone and giving them the option. And everyone decided on a salary cut and a sliding scale. So for me, that was really important, because there are 2 aspects of this, you know, when you look at how you're going to move forward. And the one is obviously cash flow, and you can say to a certain degree, you know, your business plan, and the other is your people, that you need to make sure they're looked after, and you all are in this together. You need to ensure that you're all on the same page, and you can manage it. And I guess that comes a little bit later in terms of transparency. The last thing I just wanted to mention is I think that everyone needs to take a strong, long, hard look at the product that they serve, because you can start making, you know, decisions now around that. Is it going to be here when the dust settles? I know for Hepstar, you know, we wholly engrossed in online travel and an online sort of e-commerce environment. So for us, we see more people going into the online environments and more adoption, specifically segmentations or customer groups that previously wouldn't have. But if you're sitting in an environment where maybe you're a bricks and mortar business or your product is physical, and a lot of people are moving to online sort of payments, it's difficult once that consumer shifts to go back. So if I'm someone sitting in that sort of space, maybe you're a bank, maybe you're an insurance company that hasn't got a digital environment or way to interact with customers, I would be strongly looking at my digital strategy right now. I'd actually put that number 1. Number 2 is people, 3 is cash flow, because if you don't make that change, you are not going to be around in 2 years, in my opinion.
Yeah. I mean, certainly the banks we've talked to, but these are, you know, the European banks, you know, it's very interesting. You know, they spent the last decade saying that they're digitizing, And in the last 3 months, 2 months, month even, suddenly they are actually digitizing. And I think what's really interesting from a fintech point of view is that despite the pain that the early stage or the startup-y fintech companies will feel, is that this really will prove the reason for fintech's existence. And I think if you're in a position where you can understand that, and you're lucky enough to have reach to customers that get that, and or that you can serve quickly, you're in a strong position. But absolutely, the banks now have got no choice but to actually do what they said they would do in 2010.
Absolutely. Meirav, you were nodding there
I have a few points.
So
I have a few thoughts that kind of like interact with what Brett and Simon were saying here. The first one is about, I'd say, the business model, which is something that we keep seeing every time there's a crisis. That companies that do not have, I'd say, a well-balanced business model where income is coming in and it's higher than what they're taking out every month, they have a problem. And we've seen a lot of startups also in the fintech area that their business model was relying on the investments.
Yeah.
And at these times, this proves very, very problematic. And it kind of like creates a scenario where businesses need to kind of like think their strategy of business model and where's their income coming from, where's the revenue coming from. So that's one point. And sadly, if I'm looking at the fintech industry, companies that don't have this would have a lower chance to survive what's happening now, as the longer it takes to recover. And companies that do have a business model in place and do have a way to create revenue even while this is happening have a higher chance for better recovery.
Yeah.
And the second point is the need for we're talking about when you look at fintech, you can look at it in different perspectives. You can look at it at banks, you can look at fintech solutions or at fintech startups, or you can look at fintech or at businesses in general and how fintech kind of fits into them. And you can look at where governments are on this kind of view. So if we're looking at businesses and where they need solutions for fintech and technology, the thing is that even the small businesses, I'm talking about Pilates teachers, or the big businesses like the sports industry, they have a need to create a digital presence that has payments and I'd say a seamless kind of engagement with their customer, including the payments. And these solutions don't necessarily exist right now, as fast as, when this happened and Zoom came fast, everybody started using Zoom because the solution was right there. But when I'm looking at the small businesses that need to create a digital presence, for them, it was much harder to kind of find the way to create a payment solution and interact with their customers. Okay, they can do it on Zoom, but how do they get the money? Do they need to call everybody? And we're talking about small businesses. And this is a place where fintech comes in very as a useful solution. Like, do you have a seamless solution to give to the small businesses so that they can easily move into the digital area? So that was my take on the small business. The same thing with the big businesses. IQONIQ is moving the sports industry into the digital area with VR in the games themselves, because we don't know if the football fields are going to be able to open with audiences, right? So how are you going to continue with the sports industry? So one of our solutions is having VR there and letting people that are, want to view the games with 3D glasses, enjoy what's happening. But these kind of solutions are kind of necessary for different kinds of industries, and fintech is always one of the elements that have to happen, because all of these businesses that want to move into digitalization need the ability to collect payments. Otherwise, they don't have how to, stay alive. So that's kind of my take on that part.
Great. Thank you very much. I'm going to move on to the next point, if we may, which is about setting realistic expectations. So that's, again, it's the communication side, not only to your staff, which is obviously hugely important. And I think, again, paraphrasing, I think what Nick said last week, that sort of open line of communication. Obviously, there are certain things that perhaps can't be divulged, but the more you can communicate, the more that, you can bring your staff along this journey with you. And again, we're all in this together, but, the more loyalty I think you're going to find you're going to get from people, again, we're talking next week about retention, but also talking with partners and talking with, you know, your exec team, your board, whether that be investors, whether that just be your board of directors, but involving everyone around what is happening with the business. And I'm not suggesting for 1 minute if there's anyone on this call that you know, claims to have all the answers, because I don't think any of us do. But being leaving our egos perhaps to one side and being able to be humble enough to ask for help. I've certainly seen that, you know, personally over the last, you know, 6 weeks or so. I'm not afraid to ask for help. I certainly don't have all the answers. And, you know, for me, webinars like this, whilst I obviously enjoy hosting them, I'm learning loads. So I'm kind of looking at this a bit selfishly as well. But Brett, have you got views on this? Because I know you've obviously got investors, you've got, you know, boards, you've got other businesses that you're involved in that you're a board member of and director of. So how are you finding this? Are there any
I think it's interesting. I don't think I've had this many meetings in my life on a daily basis. And let me tell you, I would have many meetings. So like maybe 3 or 4 hours of my day would be meetings. Yeah. Now it's maybe roughly 6 or 7 going weekends, you know, there's no real stop. But I do think that communication is absolutely key. And, you know, we've kind of split it out in 3 sort of sections. So one being investors and board, and I have, you know, weekly calls or bi-weekly calls with my investors just to keep them on top of what's going on. I've already instructed or spoken to them about the board meeting, saying, look, it's not going to take the normal form. Let's simplify this. You know what we're going through. Let's focus on 3 key points. You know, prioritization of projects, cash flow, and then the current environment. Those 3 key points, and then have some more discussion around it rather than, you know, focusing on, you know, what our past results are, because that's not really going to help us right now. I've also been very fortunate that you know, both our key stakeholders from an investment perspective for Hepstar, I consider mentors and also friends. So they've been very helpful during this process. I think, you know, a lot of the time as someone who's an entrepreneur, or when you're in a senior role, you can sometimes feel alone, like you not alone in the sense you don't have like family and loved ones, but alone in the sense that you're managing or carrying, you know, the challenges on your own. So I think that's really key. And from a mentor or investor perspective, it's the right channel to push, you know, your concerns into. Because if you start doing that across the board, you know, the team executives and below, it just creates, you know, unnecessary stress. From a team perspective, we've pretty much been on top of this from day one. So when I was in Europe, we kind of put a game plan together before I came back into Cape Town. So we've got daily check-ins with the different team leads, with the various team members. And that's more from a, let's say, a work or production perspective. And then what we do is at least once a week with the various stakeholders, depending on who they ultimately roll up into, we have a session and just ask them how they're doing. Because no one's been through this before. Different people manage this in different ways. So as much as it's about business, it's about people and making sure that they're okay. You know, reminding them that we're going to get through this, and that, you know, basically just reminding them about the love for the company and what we're doing, and helping them in whatever way we can. So that's essentially, and then obviously on a lateral level with the key executives, we touch base, you know, every 2 or 3 days at least.
Thank you. Meirav, before we move on to the next slide, have you got anything to add on the communications part of this? You mentioned obviously the world has become a lot smaller now, but in terms of your business, whether that's, you know, in your primary business or other ventures that you're involved in, how are you seeing communication develop? How are you seeing things that are working well versus things that perhaps aren't? What's your view on that?
Okay, so first of all, I'm looking at the slide that you have of understanding the customer's need. No, it's okay. It's actually really good because it kind of connects together. So I think this is the really important part, and one of the things that we're seeing that are very interesting are how you know, companies are kind of, I'd say in the financial field, are listening to what their customers need and pivoting accordingly. You know, I was looking at the mortgage market, and how do you give a mortgage when people are not able to meet, right? And you have companies around the world, let's say in the States, you have a few that have actually created a complete system where nobody needs to meet anybody because everything is digitalized, okay, including the signatures, including the real estate broker, the whole supply chain of the mortgage is completely digitalized. And you know, it was partially digitalized, and what they did with COVID was they created it, you know, the whole process in you know, in a very short time, was able to you know, happen without people communicating with each other on you know, in the real world, can we call it the real world, on a physical plane, right? So that's one of the interesting things that I would say. The other, I'm going to kind of change the perspective into macro again, if that's okay, and talk about you know, communications or the interactions between humans, their data, the tech giants, and the governments. Because what we're seeing with COVID is something that's very, very interesting. You mentioned earlier that there were countries around the world that were cleaning the physical money. And it's really funny because all of us, you know, if we had some physical money in our wallet a few weeks ago, it's kind of like still there, right? Because we can only use the digital way of it. But it kind of brings creates a problem that needs a solution if we're talking about the people that are underbanked and the need for inclusion. And look at this really weird scenario where in the United States, they're talking about creating a digital dollar in a digital wallet, in a bank account that's a digital wallet in the Fed with no, you know, it's like a free bank account because they need to, you know, transfer funds to people that are underbanked. Now, you know, you can look at this scenario as you know, from different perspectives. The one, you know, one of them is, okay, what does that mean for banks if there's no commission if you have a bank account with a digital dollar and a digital wallet at the Fed? Right, you know, the central bank or something like that. And they're not the only government. I think Holland is also going into that direction of thinking of creating digital wallets with the central banks. So that's one of the things. But the thing is that the moment that you move to digital currencies, especially the government made ones, then you have an issue with data, and that kind of like circles us back to China, and their talk about the digital yuan. Right, which is interesting because if you look at their part of their solution is using their tech giants as an intermediate body that, you know, allows people to go around with their cell phone and they have, you know, a green screen or a red screen or a yellow screen that allows them to move around, right? Which is, you know, on the one hand it might be a solution, on the other hand, what about privacy, right? And when you add into that mix, adding digital currencies, government made digital currencies, you understand that the aspects of privacy and where do our, like, where's the border between what I do and it's my private life and what the government knows about me? Where does that stand? So I hope that kind of like gives a perspective about what you asked about communications, but this is like a kind of a different kind of perspective about looking about the communication between, you know, the relationship between, you know, citizens, governments, tech giants, and where does that end? Now, you know, add to that mix that you have, I think Apple and Google are creating some sort of app for, you know, how people are going around and tracing, okay? Add to that digital currencies, and we're kind of like, we could, you know, this could easily slide into an Orwellian kind of scenario, but on steroids because everything is digitalized, right? So that's kind of another point of view that's kind of important to mention in this scenario. And then, of course, you know, if we're kind of like re-looking from a perspective of the small businesses, then where does that leave small businesses if they need to interact with the digital currency, and how does that work with the systems that they have and with the customers that they have, and how are the people that have, let's say they're going to do this, right, and we have a digital dollar and a digital wallet, okay, what does that mean for small businesses or medium-sized businesses? How are they going to be paid, and are their systems ready to interact with these kinds of systems, right? So that's another question about where fintech fits in with you know, with COVID.
Great, no, thank you. And I was going to bring Brett here as well, just to talk more about the sort of customer side. So again, I'll let you explain because it's your business in terms of understanding, you know, customers, understanding personas and buying habits. what are the considerations people need to have now, whether they're a pure B2B or they're a B2B2C, a bit like your business, or they're any sort of different connotation of that? What do people need to think about?
I think, I'll probably just split this up into two, simplified, say B2B and then sort of B2C. I think the first thing is you have to be monitoring your transactions and how customers are interacting with you. For us, that means listening to our travel partners, listening to the ancillary providers, getting their feedback. A big part of what we do right now is ultimately defined by the real-time transactions. And my personal belief, and that's what I said earlier on, we won't be doing a pivot in terms of our business model, is that we have to wait for travel to recover. But in saying that, we are looking at adaptations of products and variations. Also looking at different verticals within travel. So we're starting to target, different opportunities that would maybe make sense while flight travel and accommodation recovers. When it does come to the sort of B2B environment, it is very difficult, I think, for any company to do anything right now. And I would not make any rash decisions unless it's very clear that your product is ultimately no longer going to be around in a post-COVID world. So we, from a B2B partnership perspective, are touching base with all our partners, ensuring that they're okay, from a health perspective, that they're managing it, not ultimately pushing any sales or anything from that perspective. We also, again, really listening to what they're going through, because that's ultimately going to be the difference when we come out of this in terms of requirements. In saying that, we do that already, so we are used to that sort of process, and it drives our innovation life cycles. When it comes to their customers, and let's call it a B2C environment, I definitely think that there's going to be a shift in the customer base. I think we all know that. I think something as simple as travel, we may see people doing a lot more road trips, maybe taking trains, buses instead of flights. I think there is going to be a transition. There was potentially a transition before this happened anyways across Europe with rail. So for us, we'll be closely monitoring the interactions with customers and the different segmentations that come through. If you couple that with a whole different demographic of customers that are going to be coming through because they previously weren't adopting online, it really just opens up a whole new customer base to us. So we're looking at this as very, very positively. But at the same time, we have to wait for real-time data before we make any decisions. So for us, in terms of data and how we drive the business, everything is data-driven. There is no gray area, it's black or white. And right now we're holding tight from that perspective. Again, we're very fortunate in the sense that we've got a runway, and also we see the light at the end of the tunnel in terms of what we're doing. But if I was a business owner that was in a space, let's say you're only selling products within a bricks and mortar shop, then I would seriously start looking at my customer base and looking at digitizing B2B partnerships, affiliate networks, maybe bringing in some expertise that you can collaborate with. There are a lot of different options that you can do, but you need to start that process.
Mm-hmm.
Thank you. I'm going to tie this one in because I've just realised the time. Wow, it's time's flying. I'm going to tie this in that question with the next point, which was about cementing supply and building relationships. And Brett, you just mentioned there in terms of how do you build an affiliate network? How do you bring partners into this? How do you support your partners as well? And I think that's one of the key things. I mean, we've been very, very fortunate. Some of our customers have really supported us through this when they've had pressure, to reduce costs, significantly. That they've come to us and we've made a plan. And I think that only happens because you build up relationships with people. And I think relationships now are worth more than their weight in gold, quite frankly. I probably wouldn't be on this webinar if it wasn't for some of our customers. But I think there are some things that people need to start thinking about as well moving forward. So, are you using this time to identify new partners? Are you using this time to understand how you can facilitate the ecosystem. You know, what other value can you bring? You know, can you, again, Simon and I have spoken at length about this, but, you know, collaborating and really treating this as an opportunity to build an ecosystem. I'm going to bring Simon in, because Simon, I'm sorry, you've not said much today. Would you like to talk a little bit about this in terms of the partner networks? That's obviously, you know, a big driver of what Findexable is. So what are the merits behind building this kind of ecosystem, and capitalizing on this moving forward?
Yeah, I think one of the great, you know, I say great, but one of the really positive things about this moment is that people are willing to engage. You know, sales is difficult. You know, making money is difficult, that's for sure. But people have got time on their hands, and they are interested in, you know, in talking and you know, making contact, making some sort of connection. And that certainly from our perspective, that has really thrown open the door to sort of new collaborations, new opportunities, and new partnerships. You know, we're a very early stage business, you know, pre-revenue really. So, you know, we see the opportunity for us as building out a network. You know, and before the crisis, we've made very good progress, but we've certainly seen a different response rate to our kind of reach out to different organisations in terms of, you know, when we ask them if they'd be willing to engage with us at a partner level. And I think, you know, in terms of the benefits of that, well, you know, it's early for us to see, but I mean, we view, you know, both of you talked about data, both Meirav and Brett, you know, you talked about data. Well, our view is that you can't really get reliable data unless you've got access to a network somehow, because you know, if you're a newish company, the data you've got is going to be quite is going to be tilted to, it's going to give you a view of the market through a lens which is specific to you. And what we're trying to do with our index really is to give a global view of how fintech is evolving, where the innovation's happening, in what fields, in what segments of the market. And I think, you know, if you can work with partners, you're going to get a sort of ideally you're going to get a clearer view of the world, of how it's changing. You're going to identify, you know, new opportunities, particularly at this moment, because of this need for people to come up with solutions together. And I think the other thing that's very interesting is this concept that, you know, we're going to get a massive digital bump out of this moment. You know, how big a digital bump, how big a digital push forward is still to be determined, of course. But the reality is that a lot of companies simply don't have any digital presence. So the kind of fintech businesses, you know, we've seen more and more accounts automation, accounts payable, you know, companies that facilitate, you know, account reporting come online. You know, companies that can kind of combine, you know, financial information reporting with an ability to help companies sort of get in front of people digitally, get in front of target customers digitally. You know, there are going to be opportunities there. But I think you can only really start to spot these things if you work with partners to identify where the shortfalls are, where the gaps are, where the inconveniences are. And it's a lot of work, but you know, I think in the long term, that's going to see this. You know, if you can start laying the groundwork for that, you're going to see that pay off over the, you know, next, you know, the sort of following years, 2 years, particularly if you come out of this dip.
Yeah, no, I agree.
Can I just add Darren, just one thing to that as well? I think just on the supplier side and relationships and opportunities, I think you also, as a business owner or someone who's going through this process, you just have to be cautious, because, you know, we get a lot of different opportunities on a daily basis from people asking for digitized solutions across the board. And I mean, you know, you make a silly decision and you decide to go that road, and long term it really just kills your business. Because you're trying to fit, you know, a square into a triangle hole. So that's just the one thing I would want to say to everyone, is that just make sure it makes sense in terms of what your long-term strategy is and what you're trying to achieve. You know, there are other ways of managing, you know, cash flows. We've gone to our suppliers, renegotiated minimum fees, so we get some cash flow in monthly to help us during the recovery process. But making that, you're almost making like a black swan decision on your business. if you're just grabbing things that are coming in. So that's the one thing I would just say, just be wary of.
Great, thank you. I've realised the time, we're kind of 3 minutes to one. Meirav, Brett, Simon, if you've got sort of another 10 minutes, maybe we can stay online. And if anyone needs to go, please don't worry. We're recording this session and we can send it out to you afterwards, but we won't go on much longer than 10 minutes. Meirav, Brett, Simon, have you got another 10 minutes?
All good, all good.
Great. I think we're just coming to a few more points, but please, if anyone needs to come off this call, then don't worry, we will send this out to you later on today. The next point I wanted to talk about was really being front of mind for when the market recovers. You know, that there are obviously, you know, we've all got competition. There's lots of competitors out there, lots of people doing quite similar things and people going through the same pains and struggles as us. So what is going to separate us from the competitor post COVID-19? And I think one of the big things we can do at this point, clearly why I'm doing, or we're running this series here, is to try and be front of mind. So, you know, when the market does recover and people need insurance distribution services, or, you know, they want to get some data on particular partners, or they want to take their sports scenarios into VR, or conferences into VR, but I'm not.
By the way, travel can also go into VR, you know.
Yes, it can.
I'd like to see which insurance you sell for that one, Brett. But anyway, we'll come back to that. You know, falling off the side of a cliff or something. But I do think it is important just to talk about this for a moment. You know, what are some things you could do as a business? And, you know, some businesses on here, I know that there are some large corporates here that will have, you know, big marketing and PR teams, whether they've been scaled back. That's obviously, you know, decisions that are made internally. But what else can you do? And for smaller businesses, if you have got a bit of time, I would certainly encourage you to speak to your partners. You know, can you get a few partners together, like-minded people within the ecosystem that you could do a webinar on? You could maybe do a podcast series. Maybe you could co-collaborate, like, you know, we're doing with Findexable. Makes complete sense. You know, we both you know, have a vested interest in the fintech system, but you know, we don't compete, but we complement. So those sort of partnerships, I think, make a lot of sense. So as I said, you know, podcasts, webinars, articles. You know, if you can put some content out there, and I wouldn't put content out there just for content's sake, but make sure it's relevant and it's authentic. One of the initiatives that we're running at the moment is, rather than outsourcing our content creation, which I have done historically, actually my team now have got a bit of time. So, you know, my team is now writing content. They've never done it before. And I'm not saying it's the world's greatest content, but it's really authentic, and it comes from, you know, comes from the heart. And I think that resonates really well with people during these times. So I think there's an opportunity to be creative. Brett and Simon, I know you both, well, actually, sorry, Simon, I'm going to start with you first, if I may, because you come from a sort of creative marketing PR background. Anything else to add on there? Are there any tips you can give people in terms of, if someone's never done a webinar before, never done a podcast? Can we give a very sort of 3 or 4 points on how to do something? How to get something?
Sure. Yeah. I mean, the challenge it comes a bit back to Brett's point a minute ago. You know, there's a lot of noise and there's a lot of opportunities to do stuff. So you've got to try and pick what's going to match. You know, you've probably got limited time. You know, the great thing about the digital world is that, you know, the really great thing about the digital world actually is that you can do this stuff for free. It doesn't cost you you know, it doesn't cost you physically, not physical money, if that exists anymore, to do something. You know, LinkedIn posts, tweets, a webinar. You can do webinars, you know, low cost, if not free. But you do need to kind of think, you know, what is the story here that's going to be relevant to our audience? You know, what is the efficient way to sort of to connect with them and to carry on, you know, basically what you're trying to say is, we're still in business and we're still here to do business, but we're not selling. You know, you just want to be visible. So, you know, you've got to think, you know, how does that match the people you're going after? What is the story that you think is relevant to that audience during this particular period? It's going to change month by month, week by week in any case. and then, what are the best routes to get to those people? Some people, if you're in a digital selling world, more people are going to be on different channels. If you're a more retail, more sort of traditional industry, or retail focused, traditional retail focused industry, they're going to be on different channels. You might have to engage. You might have to engage the people, which might be Facebook, as opposed to a business which is on LinkedIn. So you just need to sort of map the content, map the story rather, the content that maps that story that you want to tell, and find out where those, and then understand where those people are and how best to do it. And the most important thing is, if you're going to set out on the content journey, you've got to commit to it. You've got to do it. Don't do it and then it falls by the wayside because other things come along or whatever. Life just happens, because that's counterproductive in the end. If you're going to do something, try and do it. Do it comprehensively. So therefore, do something that's achievable, realistic for you, and don't do the content through the point of, we've got a wonderful product that's the best product that anyone's ever seen. Do it from what's relevant, useful, interesting. It's got to be interesting and relevant to your audience, and it's not very easy, to get that right. But the internet's quite forgiving. You can do trial and error.
Very true. Brett, your take on this? Obviously, that's a big part of your business in terms of content distribution. Have you got any pointers for people?
Look, I think particularly on the B2B side, relationship-wise, we try and keep everything personal. So we don't do, to a large degree when you're interacting, we don't do blast emails. I don't really believe in it. I think that when you're building a relationship with a partner or supplier, it's about you and that person, and ultimately the company that backs them. So that's one thing that we are doing. We're all human beings, but we can all see when there's a blast email. The second aspect is that, when we're sending out content also, we're trying to be very cognizant of what people are going through. So particularly when it comes to sort of prospecting and sales, we're not doing any hard sells. So when we send out a newsletter, ultimately it's very much, how you guys doing? Cool, great. There's some new additions here. If you want to chat, let's chat, but it's not very aggressive in nature. In actual fact, a lot of the communications that we do now, from a content perspective with existing prospects and partners is very much just touching base. And the guys that want to sort of move forward, they'll contact you for sure. Like you're doing a hard sell now to them in a newsletter or some form of content. I can tell you, it's not going to put you on their good side, especially when they're just trying to survive, through this process. So that's something that we are doing. And funny enough, we are getting a lot of engagement from new prospects and also existing that sort of want to get a head start when they come out of this. And then the last thing is really transparency. It's when we talk to our partners, we say, look, this is where we're at. How are you guys doing? How are you surviving? What's happening in your business? This is what's happening. We're an open book, and we're honest, and we say, look, we feel it as well. So if there's any way we can help you, we'll try and help you. That's pretty much the approach that we've taken from content. We've also moved from, doing a monthly newsletter to something quarterly, to not consume too much of our partners' time. And then it's about being a yes man, right? Being part of these type of webinars and sharing your experiences and learning and collaborating, because that's ultimately how we all going to get through this. During this process, I've learned one or two things that I may take back with me. And I hope it's the same for everyone else here and the guys that are listening.
Thank you. Meirav, have you got anything to add to this?
Yeah, I do. I'm a big advocate of business models and creating income. So in addition, my take on creating the content or products is actually focusing on creating value for your audience, right? And the thing is that if you're giving enough value, then people will be paying for whatever you're giving. And the thing is that I would say there are two stages. There's a stage that we're at right now, and nobody knows how long that's going to take. And then there's the stage that comes after this ends. And I'm not sure that just waiting for things to end and then being able to create an income is a good business plan, because as we said, we don't know how long this is going to last. And the thing is that even now in this situation, there are many unmet needs, both from the business side of customers and from, end customers. Everybody has needs, and these needs are not necessarily met. And, and there are business opportunities, even now, while COVID is going, is happening, for companies to create revenue. Look at the ones that are already placed in this kind of situation. Let's say Amazon, it's creating, or Zoom, they're especially Amazon, they're creating a great amount of money right now and income because they are giving a service that people need. Now the question is, what are the needs that people have right now? And I think that one way to look at it is through the Maslow pyramid of where people are standing. So let's say you said that in South Africa you have a problem with supply chain, right? But in other areas where you have supply chain, let's say in Israel, we don't have a problem with products. But I think that one of the needs that people have here are for human interaction, right? And the need to communicate with each other and to be in touch with each other. So I'm, when I'm thinking about what you could be creating is actually answering these kinds of needs and seeing how you can give value that is also worth money for the other side, right? And they're going to be willing to pay for it. It's not enough to just create content. You need to have something that you're giving that is worth for other people, for them to be willing to pay for you because you want to stay afloat.
Absolutely. I could plug a product here that we've just launched, but I'm not going to because that wouldn't be right. But we'll touch on.
I'm curious. Do tell. What are you thinking about?
No. That wouldn't. Maybe I'll send it in the email when I follow up. But I think there was just two more points I wanted to cover off, and I'm conscious that we're kind of out of time. But being socially active or ensuring your team is socially active. Now, my definition of this and Brett's definition of this were completely different, right? So I was coming from making sure that your team's kind of their LinkedIn profiles are optimized, they understand how to use social media tools, so they're starting to build relationships or connections now for when there is an upturn. Now, Brett, on the other hand, he was looking at this and he was saying, no, we're doing, online yoga and we're doing online bingo, and he's coming up with all these great ideas, which absolutely is completely valid. But he took the active bit and I took the kind of social bit. And I think when we stuck them together, I think we came up with a bit of a plan. But Brett, do you want to run through some of the initiatives? Because I thought they were really, really great. Some of the things you guys are doing as a team to kind of boost morale and to keep things going. And then I think the slide's fairly self-explanatory, and maybe we'll just move on to the final one. But Brett, please.
Perfect. Well, at the end of the day, we all humans, and I think it's important to make sure that we interact in an environment where you can let your hair down. So we put a little small think tank team together, a couple of our spirit warriors in Hepstar, to come up with a couple of ideas. And we are now on a weekly basis doing an informal social session with whoever wants to join. And this pretty much, and obviously taking digital into account and the different skill sets. So we're going to be trying things like online yoga, where one of our guys will be instructor. I definitely won't be because I'm not flexible. Maybe online meditation, doing a group cooking class. So where someone can cook, whether people turn their video on or not is up to them. I know I'm definitely going to participate in that. I've got a wonderful family lamb curry recipe. And then, simple things like Pictionary and 30 seconds, although in our world, it wouldn't be 30 seconds, it would be 40 seconds and people wouldn't be shouting out. So there are a couple of quick things that you can do, I think, to lighten the mood and just maybe, get people out of the world that they're in right now and maybe just provide some laughs and let their hair down. For us, that's really important because, I think it's a philosophy in my life. You have to live, love and laugh, because what else is there, really? If you're not doing that and you're going through this process, then goodness, you need to make some changes.
Completely agree with you. Okay, penultimate slide, I promised, one more to go, but we were talking about this at some length in terms of using this opportunity to improve to business processes, to build some automation. Simon, you mentioned a bit earlier on about sort of accounting and accounts payable and receivable, how you can automate that. Again, just a quick point on this, I think more than anything else, rather than discussion, is that this is a really good opportunity to speak to some new vendors, new software providers. I was speaking to a very, very well-known social media company yesterday, who we've mentioned a number of times on this call, but I won't mention the name. The deal they've offered me now is nothing short of mind-blowing in terms of licensing. That they've never offered this ever, and what they've come to us with is almost a no-brainer. So, being able to sort of leverage those, leverage is maybe not the right word, but to have those conversations with some of the software providers or some of the automation providers that are out there, whether it be looking, I'm not saying now's the time to start ripping out CRMs and putting in whole new ERP systems at all. But I'm saying that, this is a good opportunity if you have got some resource to maybe take, again, sorry, Brett, I'm going to come back to you again, but you use a metric within your business to make decisions on whether you're going to implement a change or not. Just want to very quickly just talk through what that is, because it's genius, actually. It's up to you.
So it's basically an hours rule. So when we're going through this process, obviously there's going to be a balance between innovation and tech debt and items that have been on the project backlog that we're going to now tick off. So there's a big focus on hours. So what we need to understand from our CTO, from our head of product, from the developers, how many hours? How many hours a month do you have to work on this or maintain this because we haven't done it properly? And if that's more than 5 hours, then we need to look at it and prioritize it, because that 5 hours over a year is 60 hours. And that's just a very small example. So we've had items that take 22 hours of our head of tech, where we said that's crazy. That's more than 250 hours a year. So let's slot it in. So it's all about now understanding, at the end of the day, when you're sitting at different levels or in lateral departments, you don't really see the pain that a lot of guys go through. So we're taking this time to really hit the pain points and go, where are you wasting time? Let's sort it out. Let's pick this up. Let's leave that. Some of our innovation as well that we were planning for this year doesn't make sense now. A second iteration of our recommendation engine, no one's going to use it. It's not going to be used in the next couple of months. So that's been pushed out. It's about being smart and particularly understanding where those pain points are and how you can make everyone's life easier, as well as your partners and suppliers. So for us, it's an hours rule. Very simple.
Right. Very good. Meirav, Simon, anything to add to that in terms of using this time to optimize some processes and what have you?
Well, I guess one thing which links back to the content story, actually. I mean, what's really interesting now is that, so many innovation companies are innovating to help people in different ways. And, your point about social media offering you, offering you a sort of package or a deal or whatever it might be, there are lots of technology companies, small and large, that are offering extended trial periods, free upgrades and so on and so on. A simple thing to do from the content point of view, which relates to this, is someone that can put together a list of what's really useful, in terms of the offers that are being made or the innovations that are coming out in their market to their particular customer group. That's a really useful piece of content, because it's actually hard to find these things because there's so many of them. And then when it comes down to the automation and the improvement, yeah, absolutely. I mean, there are lots of promotional things out there. There are lots of tools which are, at entry level are free, and then you upgrade, so you can pilot them and start them for free. We've done that with Monday.com, the Israel-based workflow management tool. We implemented Monday, and then we upgraded to pay for the free one because we found it useful. And this is really a great time for to understand how you can sort of digitally connect your business, what's out there, and what some of the opportunities to make lives a little simpler and the business a little smoother.
Right. Thank you. Meirav, anything to sort of add to that?
Yeah. I have two examples of this. One of them, with the automation, one of the big supermarket chains in Israel are moving to automation in their
Finally.
And yeah, but the thing is that look how important that is, because we can look at Next, the online store, or it's not an online store, but the British store, and they had to close. They actually had to shut down their online presence because they had a problem in their I'd say in their background, right? They had to keep their employees safe. Now, if everything was automated, they wouldn't have that problem. And I think that this is a really nice and interesting chance for many companies to become more automated and with less manual labor, which is kind of like sad for employees. But on the other hand, it's bringing I say more efficiency. And on the other hand, I'm looking at Wix, that came up with a really interesting solution on the mobile, I'd say, area of what they're offering, that connects small businesses to each other and allows them to create an online presence, including, let's say, you were talking about yoga and Pilates. So, and that's one of the examples. My Pilates instructor, one day they told her, okay, you can't get any more customers. And a lot of yoga or Pilates instructors were starting to give free online courses, right? And she immediately pivoted to an online presence that was also allowing people to pay for the service. And she's kind of keeping afloat because of her ability to pivot really fast into solutions. Now, the solutions were not there at the beginning. She needed to kind of like use Calendly and then add another thing to kind of like have the payment going smoothly. And then finally she moved into Wix, which came out with a really nice solution that allows, to have like an online presence that allows people to book classes, pay for the classes, get the link to the Zoom, and everything is kind of seamless from the customer's point of view. And she can create some sort of income while this is happening. So I'm guessing those are the 2 points. And the last one that I wanted to say is that, we're all talking about digitalization, but do admit that we're never again going to be looking the same at drinking a cup of coffee in a cafe, because, that's something that even automation is not going to take away from us, or the need to do that. So.
The desire, absolutely.
Yeah.
Absolutely. More
Just
so
waiting for that. The next cup of coffee.
Listen, our last point here was talking about building talent pools, and obviously that's kind of where I fit in. But I really I don't think we've got the time now to go through this. So I'm going to have to keep everyone with this slide, and hopefully people will join next week. Where if Melanie allows me to, I know she's still on the call, just to spend a couple of minutes talking about this. I think it's really important. A couple of points though. Now is a really good time to start looking at your future talent pool. The world has become a lot smaller. It means you've got access to a greater pool of people. How are you going to identify them? How are you going to potentially going to onboard them? Or how are you going to select them? How are you going to onboard them? How are you going to train? How are you going to manage? All of these things you need to start thinking about today. I personally believe gone are the days where you're restricted to your local areas, your local talent pools. I think this whole COVID situation, I know Brett's got a remote or got people across the planet anyway, but certainly my business where we've had
us as well. We're an international company and everybody's based in a different country, and we work like this for months,
But I think there's a lot of businesses, especially fintech businesses, surprisingly perhaps, that aren't like that. They are still quite traditional in terms of having a head office, and everyone's in that head office. They may have some salespeople dotted around, but the nucleus of the business is in one area. Simon, you asked Nick last week about, does that make a difference to evaluation of the business? Yeah, and I think his resounding answer was no, it won't, which was really quite interesting. And I know going back historically, looking at businesses that I've been involved in, and investors come in, or you're looking at a potential sell, and they say, hang on a minute, you've only got like 3 people in the office here, and you've got 2 people in that office. This isn't really a business. I think that's changing, and I think all the technology that we're using is going to change. What that's going to mean for talent is you have a lot wider access. However, your people also have a lot wider access to different jobs and different opportunities. So you need to be cognizant of that. I'm going to come on to that next week with Melanie.
Yes.
Thank you very, very much. I'm so sorry we overran. I tried to condense this as much as we could. I think this probably could have been a 3-hour session, but we've done well to keep it to an hour and 20. Meirav, thank you so much for joining from Israel, and Simon as well. Brett, thank you for joining from Cape Town. Hope you guys all stay safe and well. I'll send out some copies of this. And just a final word to anyone that's still listening or listening to this at the end. All of this content is freely available. We don't ask you to subscribe to anything. There's nothing to pay. All of this content is available on our website and on YouTube. Please enjoy it. Please share it if you think it's relevant. And we hope to see you soon. Thank you very much.
Thank you, Darren.
Thanks, Darren.
Great
Thanks,
session.
nice to meet you.
Take care. Thanks, everyone.
Tel Aviv sooner or later.
Oh,